everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothel. Here are several things to pay attention to for the upcoming trading week. Well, the freight train of market gains continues. S&P, NASDAQ, the Dow ripping through all-time highs and having great bullish moves this week. The Russell, an awesome bullish move as well, but not quite getting those all-time highs. We'll see over the next couple weeks if we get to those highs for the Russell. All in all, things looking pretty good. What I can tell you is earnings season is still upon us, so let's start there with earnings. We've got a bunch of companies to talk about 798 to be precise. We start things off on Monday morning with Arisa Networks, Cadence Design Systems, and Waste Management. Tuesday brings you Coca-Cola, Shopify, Biogen, Akamai, MGM Resorts, and AIG. Wednesday, you've got Cisco, Twilio, Energy Transfer Partners, Kraft, Hindes, and the Chicago Mercantile Exchange Group. And Thursday, the last day of big announcements, is going to be Applied Materials, The Trade Desk, and John Deere. Now, of course, we've moved past the Magnificent Seven stocks reporting earnings, but we've seen some pretty significant pops in earnings lately. You had things like Foret and Palantir AI stocks having really nice big moves to the upside. And of course, some of these may be in your portfolio. Be careful, there is some risk there. Now, I have 4 or 5 pieces of economic data we're going to talk about next, and that's a really important one because inflation, as you know, has become the topic du jour. Well, not really du jour, Diano if you want, because it's been going on for years. And with the statements made recently by Jerome Powell about inflation and interest rates, all eyes are going to be focused on inflation. Now, one thing to pay special attention to here is note, we mentioned this last week, the components of CPI has changed. So I expect there to be a significant change in the CPI numbers. You know, right now you can look at that hard red edge and you see we're at 0.3%. Well, I'm not sure what components were changed, and my guess is this will most likely come out under 0.3 because, of course, they're going to tailor the revisions to make the current administration look better and that inflation is under control. So my suspicion would be that CPI will come out lower than 0.3% simply because they've rebalanced the components and modified those components, which typically will be in favor of whatever agenda our current government wants. But wait, there's more. That's Consumer Price Index. We also have the Producer Price Index coming out on Friday at 8:30 a.m. Eastern Time. And you can see there the previous number was negative 0.1, which of course would be a very good thing for inflation numbers going forward. It's actually deflationary, which may be another worry down the road. But for right now, it looks like things are going to be getting better for CPI and PPI, which of course does wonders for Jerome Powell and the Fed's case for maybe lowering rates going forward. Now, of course, there was talk about them lowering at the March meeting. That's off the table at this point. It's the expectation that maybe later on in the year we'll start to get some rate cuts, but the Fed has made it very clear we're going to stay right where we're at for now. Our next piece we're going to talk about is retail sales, spending. You know, it's not the biggest thing, but of course, retail sales numbers are reflective of consumption, and we need people to be buying services and goods to shop and spend their dollars to stimulate the economy. If you notice here, Thursday at 8:30 a.m. Eastern Time, we do have the retail sales numbers coming out, and I'll be honest, for the better part of the last year, it's looked pretty positive. You see most of those bars above that zero line with the previous reading at 0.6. So all in all, it feels like the last 3 months of retail sales have been getting better and better and better. Now, one thing that may put a little damper on this parade of retail sales is the fact that consumer credit is at its highest level that it's ever been. So if people keep on spending on credit, at a certain point that credit starts to dwindle and there may not be as much for them to spend. We'll see going forward how these retail sales numbers come out, but that's going to be Thursday at 8:30 a.m. Eastern Time. And wait, I'm not done. I got one more to talk about, and that is going to be the Empire State Manufacturing data. Now, the Empire State Manufacturing data gives us a clue as to how strong our manufacturing economy is within specific geographical regions around the United States. Now, the big daddy has been the Empire State Manufacturing Index. Of course, there's the Philly and Richmond and many others. But this is the big one. This is Thursday at 8:30 a.m. Eastern Time. The concerning part is, notice how much manufacturing has fallen off the cliff at the last reading. We were negative 43.7. Now, the only time we were lower than that was during the pandemic. That should be frightening because at this point we have a very robust economy, or at least that's what the economists and our central bankers would have you believe. If manufacturing is in fact going off the rails as it appears to do so on this chart, that could lead to bigger problems down the road, maybe more layoffs, maybe more unemployment, but it's not a good sign in face of, good inflationary data. This number not looking so good. So not that this will drive the markets, wildly in one direction or the other, but it starts to become one of those domino pieces that may set up for a bigger story to be told with inflationary data, with GDP data, and much, much more. Well, there you have it. 3 or 4 really important things to pay attention to for the upcoming trading week. The biggest piece will be that consumer price index and producer price index numbers coming out. So have a fantastic trading week, my friends. We'll see you next week.